Afternoon, everyone. My name is Sakib Ryan. Thank you for joining me on this warm afternoon. I'm the resident crude oil trader here at JNF Capital. I'll be giving you an insight into how we're trading oil here at JNF. I'll give you an insight into our entries and exit levels as well, some of the fundamental reasons for why we're bullish and bearish. And before I get started, I'd just like you to know that investing in the financial markets is not for everyone, as losses can exceed deposits. A small insight into what I do. I basically, as a professional trader, look to identify, which entity, whether the bulls or the bears are in control, and I simply look to piggyback off, the prevailing trend and the entity that's in control of the market. So let's have a look and see what the bears are in control of this week. Okay, so what are the bears looking at in this market, and what are they focusing on rather? Okay, one of the primary things that they're looking at is the dollar. The dollar's strength has been, like I've previously mentioned, it's a long-term influence in the market. There's an inverse correlation, like I always mention, between the dollar and commodities, or crude oil in specific as well. The dollar has been strong for the last couple of months. For the last month, so we're kind of going sideways, okay? But that underlying strength is still there. That strength is coming from the fact that traders are expecting the Federal Reserve to raise interest rates now that they've stopped quantitative easing, potentially in the summer, or maybe sometime in October, maybe possible. So as long as there's that underlying fear that interest rates will be raised, doesn't matter what currency it is, when you start talking about interest rates going up, that particular currency should appreciate, okay? And if the dollar starts to appreciate, that generally will weigh on commodities, especially crude oil. Second thing I'm looking at, okay, is obviously the inventories. Anyone monitoring supply and demand situation, you will know that crude oil inventories for the last 15, 16 weeks now have just been building. It's been build after build. A lot of supply glut coming, building up in Cushing, Oklahoma, the delivery point of the crude oil futures contract, okay? They have a maximum capacity of about 70 million barrels. We're, I think, 90% full now. That fear that, the crude oil reserves will get full and all that kind of thing, that is enough to stoke, sentiment in the market to push the market further lower, okay? There is general consensus that there's just too much crude oil in the market. There has to be someone out there to take that crude, consume that crude oil, okay? Which I will talk about in the bullish sector. Last but not least, one of the things I'm looking at is that from some of the research that we've done, we found that there are about 5,000 drilled wells, but however incomplete in the US. 5,000, that's a big number, okay? Now these wells have not been completed because of the sharp decline in crude oil prices. It just doesn't make any sense to complete those wells and bring them online, because the break-even price for US is generally somewhere in the region of about $60, $70, okay, depending on what region you're in. If those wells were completed and that oil was, brought out, like I said, the break-even price is just simply too high. It would not be, from a cost-benefit perspective, it just wouldn't make any sense. Now, the reason this is a bearish factor right now, despite they haven't been completed, is that currently, as if you've been noticing, oil has had quite a decent bounce off its lows. Okay, we're trading in the region of $56, $57 at the moment, of lows of about $43. If we pick up, the closer we get to America's break-even price, okay, the higher the probability that those half-complete drilled wells will be completed. And if those wells are completed, that oil comes out. Once again, we've got too much oil in the market, down goes the price. Okay, so it's quite interesting. It's a bit of a paradox if you want. The higher the oil price goes, the likely there'll be bearish pressure on it. So that's what the bears are looking at primarily. There are other factors around the general theme, but that's what we see what the bears could potentially be looking at. Let's have a look and see what the bulls are looking at. Okay, so what are the bulls looking at? Anyone with a computer screen will know that the market has been rallying of late. Just for the record, I've been long crude oil since $51. Okay, that's where the bias has been long. Now, where I get in and out, we can discuss on the next slide. What are the bulls looking at? Basically, oil rallied on the back of geopolitical tensions. Okay, the entire proxy war going on in Yemen at the moment, on the back of what Saudi is doing, is basically stoking fears that there'll be production cuts. Any form of geopolitical tensions revolving around major oil producers, you're going to see an impact on crude oil prices, usually to the upside. Okay, there's always fears that someone might blow up a refinery, or there might be some sort of production that may come offline. Okay, so that sent oil prices flying. Another thing is that in the recent number of days, Saudi stopped their airstrikes on Yemen. Now, that was a positive factor. That gave us a bit of a breathing room, and you would have seen oil prices come off slightly. Okay. However, one of the themes that is coming online right now is that, of course, the price of crude oil is not only governed by what's going on what's going on in geopolitical tensions, but also the knock-on effect that has on, say, logistics. Okay. One of the fears is that the insurance for the shipping, in that region is going to go up. Okay, and if that insurance goes up, of course, that will have to be made up for in the price of crude oil, hence pushing the price of oil higher. Okay. Another thing that we're looking at is rig counts. Now, for the last couple of weeks, we've had sharp drops in rig counts in the US from data collected by Baker Hughes. Drop of 42 last week, 26 last week. Now, obviously, that is production that is potentially coming offline. Okay. Now, despite the drop in rig count, we hadn't initially seen much of a production cut. Okay. So that indicated, of course, those rigs that are being taken offline are not necessarily, currently production rigs, basically producing wells. But in the last, say, week or so, 2 weeks, we have seen a very small decline in production as far as US production is concerned. Now, what that indicates to us is that we may have seen the top as far as production is concerned, and we may finally see that impact that the lower prices have had on crude oil. Okay, so like they say, the solution to low prices is low prices. Okay, so these lower prices, of course, we were waiting for that impact, and we have seen now crude oil. I mean, the US was producing something in the region of about 9.6 million barrels. I think it's come down to about 9.3. It's very small, but it's that indication that they might be topping out here, and they cannot sustain that they're feeling the pressure now. Okay, so that, of course, any signs of production coming off raises prices. Last but not least, Iran. I spoke about this last time as well, and that is still a theme that is still prevalent. Okay, Iran, as you know, Iran and the US and other countries met in Lausanne in Switzerland. They tried to knock out a deal regarding their nuclear enrichment program. It seemed like at the time they had come to some sort of solution. However, after the dignitaries parted ways, it seems to be some sort of misunderstanding somewhere. Iran was expecting sanctions to be lifted immediately now that they had an agreement of kind, and the US was saying not really. We have to see those measures implemented before we lift the sanctions. Now, at the time when these talks were going on and there was positive outcomes, crude oil came off quite sharply. Because there was this fear that Iranian crude oil would come online. There are currently about 27 ships sitting ready to basically offload at any given moment, right? And this has now become maybe a problem that that we'll have to look at somewhere in the near future, because it seems like that's not going to be happening anytime soon. Something to keep in mind, although this is a bullish factor, that Iran's crude oil is not going to be hitting the market anytime soon, it is worth keeping in mind that even if they were to meet the criteria that the Americans want, it's not going to be a turn off the key. it is going to take some time before we get that production back online, and then it will then start having an impact on crude oil prices. So as things stand, we've got the Saudi situation, the proxy war, that is pushing prices higher. You've got rig counts dropping. You've got basically cut in production, very slight, but still impacts the prices. And we've got this, Iran deal that's potentially being pushed off a little bit further into the future. So no imminent threat of Iranian crude oil coming onto the market. That in total and is basically pushing prices higher. As you know, all I'm concerned about is monitoring what the bulls and the bears are doing. However, I let the price and volume and volatility dictate what I'm going to do. So how am I trading crude oil then? As I gave away in my previous snap, I have held the bias of long crude oil since about the 51, 14, 16 level. Now, going forward, basically you can get my exact trading levels. All you have to do is subscribe to my oil report. It's free for a limited period of time, and from that you'll be able to gauge exactly where I'm getting in, where I'm getting out. So you get a chance to see what my performance is like as well here at JNF Capital. If you would like access to some of my oil reports, some of my trading levels, please don't hesitate to get in touch. You can use the information on the following slide. Get in touch with my team. A member of my team will basically get in touch with yourself and sign you up. Alternatively, you could follow me on Twitter as well. I do give out some of my trading levels there as well. I wish you a profitable trading week, and I look forward to joining you next week.